want to just talk a little bit about the role of the cycle, investment cycles, and the impact that investment cycles can have on longer-term performance of funds. What Jeremy Grantham view is that cycles at a stock level, so share prices, bonds, they go through these same patterns. But what Jeremy Grantham says is that what you've got to do is you've got to buy when shares are cheap. You buy when shares are low, prices are low. And what you'll see in this example, in this example, you can see that prices are low here. But he says what happens then, they become extraordinary cheap. So they go from being very cheap to extraordinary cheap. And the simple message here is it's very difficult to time the low points in markets. He says then what happens, you go through the suffering phase. Shares continue to fall. You suffer. Hopefully you hold the line. You don't panic and sell out. And if it's a really good opportunity and the facts haven't changed and the share price has fallen, you add to that position. But you've got to be open-minded. If the evidence is starting to confirm it, you've got to sell out. But you try and hold the line. But it's a very difficult phase to be in. It's called the suffering phase. And then you win. And often you win big. And you win big when you suffer a lot. And that was his simple view. The longer you suffer, the deeper the suffering, generally it's the bigger you win. Now what's interesting though, through these cycles, is that no one rings the bell at the bottom. There's no bell. Said, okay guys, this is the bottom, now you can start investing. You're going to be sitting on the sidelines, you've been sitting in cash, but now's the time to start investing. And there are never, ever catalysts in the market, visible catalysts that you can get your mind around to try and plan when you should be entering the market. So just wrapping up from my side, I'm going to just give you just a reminder of terms of how PSG Asset Management, how we exploit cycles, the cycles that Jeremy Grantham talked about. We've got a very simple process. It's called our 3M process. We're assessing the business model of a company. We assess the management team of a company. What we're trying to do is find some inherent quality in a business that the market is missing. Now, this is not a high bar on quality saying we'll only invest in these type of companies. That bar moves up and down. We're looking for an inherent quality in a business, in a company that the market is missing. But what really gets us excited is when we can find above average quality at below average prices. And that's often in areas of times of distress, as we're seeing in South Africa at the moment. And it'll be no surprise to you to say, if we tell you that we think there's a lot of above average quality companies trading at very low prices in South Africa at the moment.